Hi, time once again for Money TV. I'm Don Baillargeon. Thanks for being with us. Money TV is the program all about money and what makes it happen. Well, as we transition from 2013 into 2014, we've got to look back at a rather historic year in the stock market and wonder what's really in store going forward. Now, growth in the Dow and the S&P was meteoric in 2013. Several records were achieved. The S&P was up 26% going into the stretch run. And the wonder is whether we're done or is there more out there? Well, if you like to run with the bulls, you can be positive with the fact that since 1945, in any year when the S&P has averaged growth of at least 20%, the index continued growth the following year, in every year but just four: 1945, 61, 80, and 89. If you tend to sleep with the bears, there are analysts predicting a 20% market correction next year due to a perceived drop in confidence, plus the fact that there are opinions the market is currently priced for perfection and any bad news could trigger a decline. The other factor to consider is 2014 is an election year, and it's perhaps the most important midterm election we've seen in 2 decades. Obamacare has been a disaster for the Democrats, who are hoping to pad their Senate majority and perhaps even take over the House. The GOP, on the other hand, is going to use the failures of Obamacare as their benchmark to solidify their House majority and make a move towards taking control of the Senate as well. And if they're successful, that would effectively move President Obama into lame duck status. Now, history suggests there will be a correction leading into the election, but a surge coming out of it. October numbers prior to a midterm election are historically bottom-feeding. But since the Great Depression, midterm election years that ended in 4, such as 2014, have experienced mixed results. In the years 1934, 54, 74, and 94, the S&P experienced impressive results only once, 1954. But in the 200 trading days after a midterm election, stocks tend to surge, on average more than 18%, the best year showing a 30% boost in 1942, the smallest 3.9% in 1946. But looking at history is really only one way people who try to handicap the stock market are evaluating next year's potential. Wall Street is going to be dependent on Main Street. The Federal Reserve is not going to shut off the supply of cheap money until the recovery starts to hit Middle America with actual low unemployment, real job growth, and asset appreciation. Until that becomes evident, expect business as usual from the Fed with incoming Chief Janet Yellen. Someday, the money printing party will come to an end. I just don't expect 2014 to be that year. Now, here's something I do expect. I expect you to call us toll-free from anywhere in the world, 888-259-4449, for information about our featured guests. When you do call, be sure and ask to be added to the subscription list of our Money TV newsletter. Again, toll-free from anywhere in the world, 888-259-4449. On your mobile phone, just text Money TV to go 800 or 46-800. Be sure and visit us at moneytv.net. Please like us on Facebook and follow us on Twitter.